Hello, chart watchers, and welcome to this Tuesday, May 29th Market Watchers live show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Rough start to the week off the holiday weekend. Dow Jones Industrial Average currently down more than 400 points. The S&P 500 down 35. The NASDAQ down 55. Russell 2000 continuing to outperform on a relative basis, but also down about 7 2/3 points today. 10-year Treasury yield. This is a big part of the problem. 10-year Treasury yield has been declining significantly the last 5 or 6 trading days, down more than 10 basis points today, back down to 2.82%. I think that's spooking a lot of folks. Got a lot of money rotating into bonds. Volatility index spiking, as you might expect, with a 400 down day on the Dow. Currently, we've got the VIX spiking more than 3 points, back up to about 16.5. Utilities leading, as you might suspect, with Treasury yields falling the way they are. Utilities having a strong day, up about 4.4%. Financials, though, on the other end of the spectrum, banks, life insurance companies, investment services, asset managers, all of those getting hit very hard today with the drop in the Treasury yield. Home construction, though, seeing some relief because of that same reason. Among individual stocks on the Dow, GE, one of the worst performers today, down about 4%, trying to hold on to the low we saw midweek last week. Morgan Stanley, though, taking it on the chin, down more than 5%. And this is a fairly big support level going back not just to the May low, but also going back earlier in 2018. So Morgan Stanley will be worth watching into the close today. Very heavy volume there. Micron, though, on the other end of the spectrum, breaking out to highs not seen in many, many years. We haven't seen Micron at this level since 2000. So Micron having a great day, helping some of the chips. And with that, let me bring in my co-host, Erin. Good morning, Erin. Happy Tuesday. And let's not talk hockey today.
Aw, I know your Caps did lose, but it was a fabulous game. If anybody watched that first game of the Stanley Cup Finals, oh my gosh, how many times did the lead change?
I think it was a record.
Yeah, I think they were saying it was. It was a phenomenal game. It's just unfortunate your team came out on the bottom.
Yeah,
It's totally not in it, so I mean,
Yeah, I was. It was just unfortunate that the last lead change was in Vegas's favor. That's all.
It's true. It's true. But great game. Did you have a good weekend? 3 days?
Yeah, I did have a pretty good weekend. Had a few things, did some things with friends and family, so it was really good. How about you?
Oh, very enjoyable in that I didn't do like anything. So, yes, we took it easy. We took it easy. I think we went out to dinner. That was about the most we did the whole weekend.
It was probably good to relax because you had gone out of town the prior weekend. Right?
Yes, exactly. We were ready just for some downtime. So that was good.
Yeah, well, we got a crazy day in the market to start the week, and it's really unusual given the historical tendency. The market tends to do really well at the end of a month, heading into the beginning of a new month. But there was some instability from a political perspective in Italy and Spain over the weekend, and at least that's the excuse that everyone is pointing to this morning. But we got some pretty red markets, and we'll talk about that in just a little bit. But I'll let you go through the announcements and the agenda for today, and then we'll get things started.
Sounds like a plan. So as far as the week tomorrow, we have Mark Chaikin coming in. I can't wait. Then you are going to be doing Thursday a June seasonality report, Tom, since we're at the end of May. Want to know what to look for in June. And then I will be going over all of the monthly charts in the monthly decision point report on, I guess that would be Friday. So it should be a great week. As far as today's agenda goes, we will start with some Monday setups. Yes, it's Tuesday, but we're going to make those Monday setups. Trading tips and tricks workshop by Tom. Should be very good. 10 and 10. Our first symbol is going to be Chart Industries, GTLS. And finally, we'll finish up today with the decision point report. I'll let you know what's going on with my signals and what to expect going into this week. And with that, let's go ahead and pass it back to you, Tom, for those technical headlines and news.
Okay, sounds good. Here's the TNX. This is what I was referring to earlier. 7 or 8 days in a row now, we've seen this yield dropping quite a bit. We got a big jobs report coming up on Friday. So we'll see whether or not that kind of slows things down or not. But right now we got the 10-year Treasury yield moving down, which means money is rotating pretty heavily into bonds and has been for about the last week or so. I would be watching this reaction low that we saw. We had a huge move up to start 2018. We ran from about 2.40% on the yield all the way up to 2.95. And then on this next move lower, this is what I refer to as reaction low, we went down to about 273, 272 before moving back up and putting in a new high. So anytime you've got a trend like this, higher highs and higher lows moving from the left side of your chart up to the right side of your chart, you don't want to go back down and lose that prior low. Now, some of you might say, well, lower interest rates would be a good thing, but it really isn't normally a good thing, because as rates fall, it's usually due to expectations that the economy is not strengthening as expected, or possibly even weakening. That's what would drive Treasury yields down like that. So we really don't, we want to continue that uptrend. And in order to do that, we do have to hold on to this low, in my opinion. So I think from a very short-term perspective, while we're dropping like this, we want to watch that 272 area pretty closely. Crude oil prices today, we saw a pretty big hit last week. That was continuing earlier today. I haven't looked in the last hour, but about an hour ago, we were sitting at 66.75 per barrel on crude oil price. And you can see the huge drop at the end of last week before today's low. And when I go back and look, I mean, I see 66 as a really significant support level from a short to intermediate term perspective. And that is from taking these prior highs. You can see the triple top. Maybe, I mean, if you do each of these individual days, it's like a quintuple top on crude oil prices at about $66. We broke out above, and since breaking out above 66, you can see we haven't closed back down below 66. So that's an area to watch. And like I said, an hour ago, we were at 66.75. That's almost a 10% drop off the high we saw early last week. Very significant drop in crude oil prices. So what kind of impact is that having? Well, doesn't take a rocket scientist to figure out that the XLE energy shares not going to be doing well when crude oil prices are dropping that rapidly. And you can see the XLE, I would have expected the rising 20-day moving average to hold. It did not. We've come back down. And I'd be watching 72, 73. That's where we have a number of these tails on the XLE, meaning that this ETF has traded down into the 72, 73 range on many occasions over the past 30 to 45 days, but we've yet to see a close beneath 72. So that's something to watch, I think, closely. I mentioned that Italy and Spain having some political instability. Global markets really were getting hit. I did notice earlier that the German DAX was down a little bit more than 1%. I don't know if that's escalated. I haven't looked at it recently, but I did want to point out on this chart that as we get closer to 12,600 on the DAX, I'd really be paying attention to that, because off of the low that we saw when we had all the selling back at the end of January into the first 2 weeks of February, the reaction highs that we were getting kept failing at about 12,600. Then we finally broke through, and it looked to me like an inverse head and shoulder. We got a left shoulder neckline, came down to this low, which is the inverse head, back up to establish the right side of the neckline. One more dip to the 20-day moving average puts in that inverse right shoulder, and then we break out. We had about a 900-point measurement. We never reached that. And the measurement, by the way, would be from 12.6 down to about 11.7. That's 900 points. You add that to the breakout level, that would take you to 13.5, which would have just about sent us back up to the January high. But you can see we failed at 13.2 and are coming back down. I'd like to see this 12,600 level hold on the German DAX. So that'll be something to watch later today and into the next coming couple of days. Next up, got to mention the dollar. The dollar is absolutely soaring. Another huge move today, up 0.6%. This has been almost a straight up move. We had a little bit of weakness the second week of May, but otherwise we've been going up almost every day for more than a month now, probably 5 to 6 weeks. And why does this matter? Well, one of the themes we've been talking about is the outperformance of small cap stocks when you've got the dollar rising like this. I'm going to pull up a weekly chart, and let's go back over the last 5 years. And I want you to take a look at what the dollar has done. You know, there have been some key periods of strength in the dollar. You can see here from about August of 2016 into maybe December of 2016. We had a really strong move. We kind of have a move right now similar to that, but look at the one that occurred back in mid 2014 through the early part of 2015. That was a really lengthy move. These are weekly candles. So you can see essentially we went up for about about 8 months, almost without a pullback. And that seems to be what we're starting here. And I've gone over before, and I'll pull up again in just a minute, the 10-year Treasury yield here in the U.S. relative to Germany, what that means. But if you just pull up, I'm going to show you the small caps on this chart. I'll pull up the Russell 2000 versus the S&P 500. Now, what you just keep in mind, actually, let's do it this way, and you don't have to keep in mind. Let's leave the dollar there. Let's go down here and put in this price relative, which is the Russell 2000 versus the S&P 500. And let's take a look at when that dollar is rising. Here's a period of the rising dollar, and you can see the Russell 2000 relative to the S&P took off. Here, we got the rising dollar. The Russell 2000 relative to the S&P 500 took off. And then finally here, we've got the dollar, and look at what the Russell 2000 is doing. Again, very strong, and we've talked about this quite a bit looking at this next chart, which is the 10-year Treasury yield here in the U.S. minus Germany's 10-year Treasury yield. So it's the difference between the two countries' 10-year Treasury yields. It has been rising. When it moves up, the dollar tends to move up with it. When we go through these periods where the dollar goes the other direction, we usually come out of those periods with a surge in the dollar. We have the last 2 times. It looks like for the 3rd time it's underway. And with that, we get that Russell 2000 outperformance. So the one theme that continues to hold true here, and I pointed out earlier when the Russell 2000 was down just 7 points, while the other major indices are getting hit a much higher percentage. I think a lot of this is being attributable, or can be attributable, to the rising dollar and the fact that the U.S. Treasury yields are rising so much faster. I think this move in the dollar could just be starting because, again, this negative divergence that developed, we've seen U.S. Treasury yields break out to new highs. The dollar is nowhere near the high that it was back at the end of 2016, early 2017. So this could be the start of something very similar to what we saw back in 2014. We'll continue to update you on that as we go. But with that, I'm going to go ahead and turn it over to Erin. I know you got a few upgrades and downgrades. I'll let you take it away.
Yep, absolutely. Let's go ahead and get that started. 2 upgrades, 2 downgrades today. I haven't had a chance to look at them too closely, so let's go see what we have going on here. So the first one I'm going to look at is Novartis. And we can see, as far as this is a downgrade, so certainly it's hit the stock rather hard as we opened. It looks like we opened, well, we gapped down below support here at about that 76, 75, 70 range. And we appear to be going lower. Look at the PMO, it's turning down. You can see the tops on the PMO are going lower. I highly doubt this is going to be a good one for a bottom pick. Let's go ahead and look very quickly at the weekly version. Yeah, I mean, you could say there's some support here back from 2017, but I would say the fact we lost this area of support right here, we'd already lost this area back up here at about 80. So I don't see any opportunity here as far as Novartis. The other downgrade we had, Sun Life Financial, another one that got a big gap down this morning and is continuing lower. PMO just about ready to give a sell signal. I think actually, though, I wouldn't throw this one away off of the watch list just because we're getting really close to this rather strong area of support right around $40. And this could be an opportunity at that point for the stock to make a move back up. But I have to say, looking at the volume patterns here, looking at the PMO, I don't think there's going to be opportunity here too quickly. Looking at upgrades, Phillips 66. And we can see with the upgrade, it is up 0.6%. But I've got a PMO sell signal in overbought territory. Granted, the scooter still looks pretty good here. OBV is sort of trailing off a little bit though. We've hit some support. It looks like we've got some right around here at a 112.50 is where I would be looking if we continue with the pullback. But with this upgrade, I would expect to see it move up back above this high we had here. Let's take a very quick peek at that weekly chart, and then I'm going to get ready to give this back to you for your tips and tricks. And what we can see is the PMO buy signal is in on the weekly chart. So it does look like we could get ready to head back up to new all-time highs. Let's go ahead and move to Roku, another upgrade today. This is interesting. We got the breakout here above this area of overhead resistance, 37.50. It's actually trading above it. And you can see with this intraday high we had in May earlier, you know, we passed that up with the intraday high. So I do like that. But you can see this is some pretty serious overhead resistance here at about $40, I would say. Just because I'm looking at all these bottoms, this was some very strong support for the early part of 2018. And now we're coming up against it. So I would be watching. But with this upgrade, you know, there might be some opportunity left here looking for that breakout. And I'm going to pass it back to you now, Tom. I know you've got a really nice workshop prepared for us.
Actually, before we get into that, we got Monday setups. You want to start that?
Oh my gosh, you're right. I wrote that down and then I completely messed it up. Yes. Let me go ahead and I'm going to move over to, it's a Tuesday. It's not Monday. I don't have too much of an excuse here. So here were the Monday setups I came up with. I wasn't honestly.
Erin, why don't we, before you get into this week, why don't we pull up last week's? I know you weren't here.
I wasn't. That's, I guess, part of my problem today.
Yeah, Julius and I had picks to make, and I know I looked at these an hour ago, and we were kind of just about dead on, but the market's been so crazy, I thought maybe we just summarize those first. And I know Julius picked Coca-Cola at 42.46, and one of his reasons that he talked about was he was starting to see a little bit of improvement on the RRG, and I think the long-term chart, I mean, if you go back, you know, last several years, Coke was in this steady uptrend, and he kind of liked the trend line that it was had pulled back to. So he picked it at 42.46. It's 42.65. So he did make money even with the market getting hit the way it's gotten hit today. I know earlier I looked and Coke was the best performing stock in the Dow. So I got to give Julius some props. He's got a winner here with the market getting hit really hard today. So good job, Julius. And then mine was Garmin. I'm afraid to look because it was still up, but that was a little while ago. Nope, it isn't up now. 60.31, and it was at 60.38 last week. So still not bad on a relative basis considering what the market's doing. But Julius wins. He got me by a little bit, probably by about 0.5%. But a winner is a winner.
Is a winner is a winner.
All right, so we are going to move on now. I know it's Tuesday, but we still always like to start off the week with our setups. So why don't you go ahead and take it away, and what do you have for this?
All right, so I came up with 5. And like I said, I honestly wasn't that impressed with everything that I got in this particular scan today. Found it interesting. I ended up with a lot of utilities, and I ended up taking out, oh gosh, what was the other big one? Energy. I think I had some energy stocks, but they didn't look that good to me. And we've got the 2 financials here. So I'm going to go through them really quick. First, energy, FE, is the one that is going to be my pick. So I'm going to go over that one last. So let's start with Entergy Corp Holding. I came up with this one. I run my scan, my PMO scan. I do tweak it a little bit from the one that I printed in my blog, but you can get to that scan if you want to copy it. Just go to the Market Watchers Live blog, and at the bottom of all of the recap articles, you'll find links, very important Market Watchers Live links that include the PMO scan, as well as Tom's relative charts, that sort of thing. So go ahead and you can check that out. So I'm looking at Entergy, and it came in because we've had this nice rise on the PMO. You can see we've had great volume pattern going on here. I marked this off as a breakout because we saw it come back out above these tops back in late March and early April. And now I think upside potential would be right around that $82, but certainly it could go higher than that. I didn't pick it. I just didn't care for the risk reward here. I think you could set up your stop all the way down here at 77.50 if you're looking at a more intermediate term trade, because you'd be looking closer to this, 86 range as your upside target. So, but for the Monday setups, I like to keep a really tight stop because it's a really short-term trade. Obviously, this is an exercise. I will let you know if I ever buy any of my Monday setups, but I have to say, like I said today, I wasn't so impressed. At this point, so I left Entergy on the list. The other one I had Exelon Corp, another conventional electricity firm, which is interesting that that's what we got on the scan today, coming up against this overhead resistance. So I didn't want to pick that based on, for that reason, but we did get a breakout above this declining tops trend line. But it seems like we're petering out a little bit here. Of course, the PMO is suggesting that we should see that breakout given the rise that we've had. And again, you've got a really healthy OBV here. So we could very well see the breakout, but I didn't think this was a great candidate for a 1-week trade. And National Storage Affiliates left this one in as well. The problem, like I said, with this one and that last one we looked at are, is overhead resistance is like right here. So even though I'm getting these PMO buy signals, I prefer something that has a little bit more room to run. NSA on a weekly chart, you can see these are not just near-term highs, these are all-time highs that we're looking at here for NSA. So that one, while it's on my list, I didn't pick it. Walker and Dunlop. This one I thought was interesting in that you could kind of make a case for a ascending triangle. We're having some trouble here breaking out above that $57 area. But I think if we get that breakout, there's still that $58 area to sort of survive through. But I think your upside potential could be up here at around $61, $62. Again, I didn't pick this one, but it is a nice setup with the PMO. And you can see that in the thumbnail how OBV is starting to turn back up. Pretty healthy scooter, not quite in the hot zone, but that's all right. We want to see it make a big run past the 70 line, and we want to get it in that hot zone, but it's not quite there yet. I would just be watching that $58. I think you could get in as a short-term trade and start looking for that $60 range. So that's why I left it on the list. But for me, that was a little bit difficult as far as overhead resistance coming up here at about $58. So I opted out of that one for my pick. First Energy Corp. Here we go. And I look at the scooter. I'm just going to start from the bottom here. Nice scooter. You can see OBV tops are now, they continue to rise. We already know that if we get the OBV topping at the end of today, which we could see because it is backing off a little bit today, pulling back. The PMO is just about ready to get that buy signal, which I liked a lot. I am looking for a price rise. My target's, about $35. I think we could grow past that. A bottom right above the zero line to me shows some internal strength. It didn't actually go negative. I'm setting my stop right around that 50-day EMA since this is such a short-term trade. So right around 33.60, 33.50 is what I would consider. And like I said, I'm looking for a move to at least $35 here. And I think, did I take a peek at this weekly? And you can see above 35, there's still plenty of room at the 36, at the 37, at 39. So I think there's a lot of upside potential on this one. You can see the PMO is flattened out. It was moving lower. So again, I think that's a positive as well. So First Energy is my pick. It looks like it's currently at 34.05.
Yep.
Yes. Oh, that actually works out better because I bought it. If I were to buy it earlier when I did the pick, it was 34.11. So I'm going to fix that to 35.05. I think we agreed on. It's now gone to 06, but that's fine. All righty. And that's it.
All right. On the books, FE at 34.05 for this week. Okay, let's take a look. I got a few stocks I'll go over, but first let me pull up the one I'm going to go with this week, which is Parsley Energy. I'll give you a quick update, make sure I got the current price. The price I have it at is $29.13. So that will be the price. First of all, I like the energy group. I know crude oil has been dropping, but as I mentioned earlier, I can go back and show you this chart again if you've just walked in. But the crude oil chart, you can see we're getting down close to what I think is really good support around 66 to 66 and a quarter. Last time I looked, this is as of Friday's close. Actually, today, crude oil prices were down another dollar or maybe even a little bit more now. But $66 is a key area of support, and we were trading at 66 and change earlier. So I think crude oil prices, if they hold support and start to turn higher where I would expect them to, then I think that could provide some impetus to the upside for many of the energy shares. So that's one of the reasons why I went with PE. Now, I could also pull this up on my relative chart, and you would see that PE had been performing pretty well, had broken out recently above this top. I didn't like the fact that it came back down below 31, but I really liked that reversing candle on Friday where we got down to 28 and change, came all the way back up, closed 29 and a half, printed that hollow candle, and it was really close to a key support level at 29. So we failed to hold 31 support, but at this point anyway, we're holding 29 support. I'd watch that tail from Friday down that low. I'd be a little concerned if the low was taken out, especially if crude oil prices break below $66 a barrel. That's something to keep in mind. But you can see on a relative basis, well, first you can see on a sector basis or an industry basis, I should say, we're in a group that has been pretty strong, has broken out recently to new highs. This is, if there's one downside to this stock, is that it has been a relative underperformer, but I'm making the exception because I see strong volume trends. The big move up was on very heavy volume. We came back down close to a support level on lesser volume, so I'm assuming we're going to make that turn back to the upside. But it is going to require the group itself strengthening. It looks like maybe we're just starting to turn back up. This has been a group that's done very well relative to the S&P 500. So if we get that going, hopefully that reversing candle and price support at 29 holds and we'll turn back up here. So I'm going with PE as my pick for this week. CATM is another one that I was watching. I'm waiting for a reversing candle. What I'd really like to see is some kind of a drop, maybe a bullish engulfing candle. You can see the huge move up was on heavy volume. We've been drifting lower on much lighter volume, so I'm looking for some kind of reversal. Haven't seen it yet, so I'm going to be a little careful there. COP, this one came down right to a key price support level. This was the other stock that I was thinking about instead of PE, but I'm going with PE. COP, though, was up $72 just a week ago, went all the way back down close to 64 earlier today, trying to reverse off the 50-day and price support. CYH, I may have mentioned this one a couple of weeks back, but CYH, I'm waiting for a reversing candle. I'd love to see it today. That open was 431. I know because I'm watching this one pretty closely. It's on my strong earnings chart list, but that open was at 431. Today's open was 432. So if we can get a move down intraday, volume looks like it's picking up a little bit. If we can reverse back up today, I may buy this one later this afternoon. I'm kind of watching it closely. EAT, this is Brinker. This is one I had recently and got stopped out on the move back below the 20-day moving average. But I do like it in this gap support zone. That's where all this volume came in when we gapped up with earnings, and now we're into gap support. This could be the reversal, although I was thinking maybe we'd get down to 41 and test that 50-day moving average. But this is another one where the reward to risk is building pretty nicely. EGN, this is Energen. Negative divergence, higher prices, lower PPO. Seems like we're working our way back down for a 50-day test, but overall, nice uptrend, good volume trend. So I like this one. HLX, which is Helix Energy Solutions Group, kind of getting a lot of energy stocks in this this week's setups. But recent lows, this reaction low off a huge move up with very strong volume. The reaction low came in just below 750, and here we are 1 week after being at 850. We're back down to 750 range. So short term, this is an interesting area. Although If it does break down, just keep in mind it's a fairly small stock, and going back and filling this gap and getting close to the 50-day is not out of the question as well. So just be prepared maybe for a little bit more volatility if you get into that one. JHG is the last one. This is Janus Henderson Group. Big move down. I think this is in that investment space, which is really getting hit hard. I'm pulling up the it's asset managers, DJU Sol. This is a group that's getting hit really hard today, but it's also filling a gap after it had printed some pretty nice volume on this gap up higher earlier. So this is a key area of support. So the reward to risk is looking good. I'd like to see a reversal, maybe a move down into 30s, come back up and finish at 31 and a quarter or above, something like that. Might be a good entry point. So with that, let's see. Why don't we just summarize our setups? We've got Erin's picks right there. FE is her selection for the week, 34.05. I put in a number of potential setups, but my pick for this week is PE at 29.12. And we'll see how we do next Monday when we come back and give you our next list of setups.
FE and PE. That's interesting.
FE and PE. Yeah, I don't know. We could probably go CE. I think that's Celanese. DE is deer. Well, we go right down the list, but we're going to go with FE and PE for this week. Okay, today I am going to do a workshop for you, and it's for many of you to be a little bit of a refresher on it. Hopefully, I'm going to be touching several different subjects, so maybe everyone out there will get something out of this segment. But the first thing I wanted to do is just take you back to the member page. So let me show you where we're going with this workshop. Okay, you should have the members dashboard up. The first thing I wanted to do is just make sure everyone understands how you can set up a watch list. So this workshop is really about just giving you some trading tips and tricks on how to use the website, and also how to do some scans, how to review the charts, and maybe go through some of the things that I go through when I trade, and hopefully wrap it up at the end with determining position size, or at least give you a couple things to think about when you decide how many shares you want to buy. The first thing I want to do is I have a chart list down here, and you can see I've done workshops, and I've got them in order, some of the recent workshops, but I'm going to add another chart list, and I want to add it right here. So I'm going to add it with 0604 workshop. So all you have to do is go down the bottom and click on add new list. And then I can just type in 0604 workshop. And let's call this creating a watch list. All right, so there's my create new list. Now, if I go back to the members dashboard and I scroll down now, you will see that there's my workshop. I now have a new list. It has 0 charts in it because I haven't done anything yet, but I have quickly established a new list. So if you want to set up a watch list, you could call them, you could have multiple lists in order. And maybe the first one is high volume. The next one could be 50-day test. The next one could be trend line support. Whatever it is that you like to follow, you could have a chart list for that and be able to store your charts in there and to look at later for potential trades. Now, what I want to do today, I'm going to go into my scans, and let's pull up a high volume scan. I usually run this scan at 10 a.m. And I'll show you what I normally do, but let's edit it. And I'll edit it here. Well, actually, let me just read what this does first. So for the last intraday update, this scan is going to look at all U.S. stocks. It is only going to pick up those stocks that has a 90-day simple moving average of volume that's greater than 300,000 shares. I like to make sure I got liquidity in the stocks that I'm looking at. The 90-day simple moving average of the close, so I'm looking at price here, for today is greater than 1. So I want to make sure over the last 90 days it's averaging at least $1. I mean, some of you might use $5, $10, whatever. And then finally, this is the big one. Daily volume for today is greater than the 90-day simple moving average of volume for today times 0.4%. Now, or times 0.4, not 0.4%. The reason I do this is at 10 o'clock in the morning, you wouldn't expect that a stock would be trading 40% of its average volume in the first 30 minutes. So what this scan would be picking up are stocks that are trading unusually heavy volume, but they also have to meet the liquidity requirements that I set. Their average volume has to be at least 300,000 shares. Now, that's what I would do at 10 a.m. Well, it's not 10 a.m. It's 12:30, 12:35. So I'm going to change this. But before I change it, this is in the basic scan workbench. I want to switch over, and let's click on this advanced scan workbench so you can see how this would show up in the advanced scan workbench, okay? I'm going to change this now from 0.4 because this would pick up a lot of stocks. We're almost halfway point of the day. So normal volume, if I put in 0.5, would probably pick up quite a few stocks. I'm going to double that and go 1.0. And let's just see what comes up. I always check syntax, make sure the syntax is correct, which it is. And then I run scan. And let's see how many we get. All right, 150. For the purposes of what we're doing here, that's fine. So what I'm now going to do is I'm going to dump these 150 stocks into that list that I just created. So under available actions, I can replace an existing chart list with these results. Then I scan down, I find the one I just set up, 0604 workshop creating a watch list. I select it and I click OK. And now all of a sudden, my list has 100 and whatever it was, 150 stocks in it. Okay. Now, the next thing that I would do is once I have them in this list, I've run a scan. I could run lots of different scans. I ran a high volume scan, got this. It's now in this list. And I could do a couple of things. I can just pull it up and review charts. So let me show you here. I could do 10 per page. I got 150 stocks in here, though. It's going to take me a little while to go through, these 10 at a time. Even as quickly as I can go through, it's still going to take a while. So maybe one thing you could think about doing now that I've got 150 stocks in this list is now let's go down to scans again. And I'm going to pull up this RSI 40 to 50 scan and edit this. Now, it's right now set up so that it's going to go into my strong earnings folder. Well, I don't really want to go into that strong earnings folder. I want to go into the folder we just set up. So I can scroll down here, pick up this 0604 workshop, creating a watch list. And now I'm running the scan against this watch list that I just set up. And what it's looking for are stocks that have RSIs between 40 and 50. Now, why would I be interested in that? Well, what I have found over the years is that when you're in an uptrending stock, normally when you get these pullbacks, the RSI will hold somewhere in that 40 to 50 range. I mean, maybe it goes into the upper 30s, maybe it gets to 51 or 52, but a lot of stocks that I buy have RSIs in the 40s. So this is a scan that I like to run. So now I've got the scan. I'm doing it versus this watch list. I'm only running it against this watch list. I'm going to update my criteria now because right now it's showing strong earnings stocks. I got to update my criteria because I changed that. And now I can run my scan. And so now I'm running a scan of the watch list I just created. And look at this. Now I'm down to 18 stocks. So I'm going from high volume stocks, which there were 150 of them, and I only want to look at the ones that have RSIs from 40 to 50. I just narrowed it down to 18. And so now I'm going to put it in I'm going to replace an existing chart list. I have scan results set up. And high volume is here. Here's RSI 40 to 50. I'm just going to drop them in here and click OK. And now my 18 stocks are in the scan results folder for the RSI 40 to 50. Now I'm going to pull them up by 10 per page. Now I'm going to review the charts. So we've set up a watch list. We've run a scan against it. And now I'm reviewing charts. All right, so as I go through, this one's selling off on pretty big volume. You could say, well, it's at a key support level. It's okay. I'd keep it on here. This one's breaking down right now below the 50-day moving average. I don't know. There's this little trash can button as you're going through the 10 charts per page, and I'm just going to click on that, delete it. So that's gone. I'm not looking for ETFs, so gone. Here's an ETN, gone. This is a triple bearish ETF, gone. Okay, now I get to this one. EC, Echo Patrol, SA. Now I'm looking for stocks that are in uptrends that have pulled back to RSI 40 to 50. And you can see there's the RSI between 40 and 50. And the other thing kind of catches my eye here is I'm going to click on this one and take it to a different page so I can annotate it. I'm going to annotate this. And if you notice, when we set this last high, check out what the PPO was doing. So we have a negative divergence on the last high. Now I always say, well, yeah, but you got to be careful. If there's volume coming in on the breakout, it's hard to argue negative or slowing momentum if it's a big volume breakout. Well, the problem here is that when you look at the volume on this breakout on May 14th, look where the volume is. That is not big volume. That's average volume at best. Many of these days were triple, almost triple the volume that we saw on this day on the breakout. So you got a breakout with average volume with a negative divergence. Not good. What I look for is no longer the 20-day holding support, but I look for a 50-day test and a move back down to test the PPO center line. And if you look back on this chart, we saw essentially the same thing here back at the end of January here. Right there with the lower PPO, higher price. Now, in this case, we did have heavy volume, but we didn't hold the breakout level. And when we failed to hold the breakout level and we lost the 20-day moving average, pretty good indication we were going to consolidate for a while, maybe get that 50-day test. You could see the 50-day almost tested here. Eventually, we did after sideways consolidation. And when all that happened, look at what happened to your RSI here, back in that 40-50 range. So when you're looking at an uptrending chart, what you don't want to do is buy a stock that's breaking out with a negative divergence. I'm not a big fan of that. And especially, even if it's big volume, if it can't hold on to that breakout level with a negative divergence, you're probably going to get a total unwinding of that negative divergence, meaning that I'm going to look for a PPO back to the center line. I'm going to look for 50-day tests. And from there, perhaps start a new uptrend. That's what we did in March and April. And I think that's what we could do here with EC. So I've set up my watch list. I've run my scans. I've reviewed charts, and I just found one now here. It's sitting at the 50-day moving average. It's not too far from what I would consider some pretty good price support. If we go back here and we take this prior high, look at this breakout on very heavy volume. We started pulling back. We got close on Friday to hitting this support level, along with the PPO hitting center line, the RSI in the 40 to 50 range. All of a sudden, this one is lining up to me to be a little bit better. So then the question becomes, well, what is it a part of? What industry group, what sector? Is this a stock that I want to be a part of? Because I like the chart. And so what I would say at that point is to pull up the relative chart that I style. That's what I would do next. And when I pull this up, what I see is a stock that's been breaking out. Notice that its industry group, the DJU Sol, which is the integrated oil and gas, is actually lower on its most recent high than it was back in January. But look at EC. So we've actually got a leader here in this space. So if you like the space, then it's kind of easy to like the stock. Now, you can't really, well, I guess you could see here, we've got some pretty interesting support. The last pullback was right around 575, and that's where we're sitting on the DJU Sol. So if this support holds and we start to turn up, we'd be trading a stock that is one of the leaders in this space. So here you can see the EC relative to the integrated oil and gas. Look at this relative uptrend that we've been in. And even with the group falling back, it's actually starting to turn back up again here with relative strength. So I like the group. Relative to the S&P, EC's done well. If there's one negative, it's that the relative strength has failed to hold support. Here you can see actual. This is absolute support, and here is relative support. So the group relative to the S&P 500 is weakened some over the past few weeks. And again, that's because of the dollar or the oil prices falling. Many of the energy stocks have taken a big hit. But again, we know that the crude oil prices are approaching support. So this is an area where I really feel like this is a stock in a group that needs to bounce at the current price. So I could make an argument that I want to be in this stock. So then the question is, what's the reward to risk? How do I trade this? And I would say at this point, I'm just going to pull up EC so we can look a little bit closer at the numbers here. There's a couple of things. To minimize risk, you can always get in twice, 2 entry points. And so one thing I would consider is maybe if you wanted to do current price where it's sitting right now at 2102, I'd probably use a second entry of about 1975, which would have a combined weighted entry of roughly, what's that, $1.27, so that's 63 cents. So it's 2039 would be the average price of those 2 entry points. 2102 and 1975 would get us back to an average entry of 2039. So let me just put this down here. So what I would be looking at is an entry 2039 target. Well, I'm looking at it to go back up and hit $23. So I'm thinking $23, and my stop would be a close below 19, let's call it 1950. All right, now when I look at this, if I get both my entries, I will risk 89 cents on this trade down to the 1950 stop, but I'll have $2.61 to the upside. So I've got almost a 3-to-1 reward to risk, which I like. If I can get it, I want to make sure I have at least 2-to-1 when I get into a trade. But if it's 3-to-1 or 4-to-1, or even better would be 6-to-1, 8-to-1, 10-to-1, something like that. Because when you think about it, if you get into all your trades that are 3-to-1 reward to risk, and you only hit 1 trade and then lose 3, you're going to break even. If one of your 4 picks goes and hits the target, you're going to make, in this case, was that $2.61? You're going to make roughly 11%, something like that. But when you lose, if you lose 89 cents, you're going to lose, 4% or 3.5% or whatever that number, 4%, I guess. But anyway, so you got 11 or 12% upside, you got 4% to the downside. So if you have 1 winner that gets you 12% and you have 3 losers that lose 4%, you break even. So one of the keys with trading success is setting up reward to risks that make sense. Now, if I get in here at 2102 and I put my entire position in here, then my risk to the downside becomes this trade is much different. 2102 down to 1950 is $1.52 downside. 2102 to 23 is $1.98 to the upside. All of a sudden, I barely have better than 1-to-1 risk. So if I'm going to do this trade, I've got to do it in increments. If I get half a position here and it never goes down to 1975, and it goes to 23, then I only have half a position, but I cash out on half a position, which is still fine by me. Now, how many shares should I buy? How do I determine a position size here? Well, this is a tricky question because number one, I've got to stop here. I'm using a closing stop. What happens if the stock goes through intraday and all of a sudden it's 1850 intraday? That's going to really change this reward to risk picture a lot. You're going to be risking a lot more than you thought by having a stop at 1950 if intraday it's at 1850. I think the toughest part about trading is trying to decide whether or not you want an intraday stop or a closing stop, because many times, look at this stock or look at this day's action way below the 20-day moving average, and then we come back up and we go back above it and hold it, and then 3 days later we take off, we're up another 7%. These false breakdowns can trigger big moves to the upside. So when you get stopped out on an intraday basis below support level, you could be getting stopped out right before you get a big reversal that marks a major bottom. That's the risk of getting out on an intraday basis. But let's just use the numbers here, and I'm going to use 2040 instead of 2039 to make the number. Actually, let's use 2050 to make it a lot easier to do the math. So let's say the entry was 2050 and my stop is 1950. That's $1 you're willing to risk. What you have to ask yourself is, how much are you willing to risk on a trade? If you've got a $100,000 portfolio and you're willing to risk $1,000 on a trade, not invest $1,000, but risk losing $1,000 of your portfolio in order to make $3,000 on your portfolio, then you would look at this. If the entry was 2050 and you've got $1 to the downside and you're you're willing to give it $1,000. You're willing to lose $1,000. The math is pretty simple. I could buy 1,000 shares. I buy 1,000 shares. If the number was 2050, I buy 1,000 shares at 2050. If it goes down just below 1950, I get stopped out. I lose $1,000. If the stock turns around and goes to 23, in that example, at 2050, I'd make $2.50 times 1,000. I'd make 2,500. So at 2050, my reward to risk will be 2.5 to 1. But that is now for 100,000. You might say, well, $20,000 is an okay amount. Others might say, well, no, I don't want to put 20% into a position. Keep in mind, this is my last point. I'm a short-term trader. I'm not trying to buy a stock and hold it for the long term. If I was going to do that, I think 20% in one stock is a lot. As a short-term trader, just trying to capture the inefficiencies of the market, I'm looking to get in and out of this position pretty quickly. And I'm trading almost all stocks in my strong earnings chart list because I don't want big surprises. Not that they can't have them, but my experience has been that if they've just reported numbers that beat Wall Street's estimates, top and bottom line, they tend, and again, in my experience, I haven't done any kind of formal study, but my experience is that I haven't had too many surprises where all of a sudden they come out one morning and warn for the next quarter. Not if they just beat top and bottom line. So anyhow, that's how I would consider using the the reward to risk and calculating your entry, target, and stop to justify the number of shares that you're going to buy. Now, sometimes I might look at this, and if I did get in at this level, or if I got in at the entry at 2050 and I know my stop's 1950, I kind of factor in what if it does go below that 1950? What am I going to do? Am I just going to take my stop intraday below 1950? Am I going to let it go a little bit further? And if I'm going to let it go further, then I might not want the 1,000 shares because that's going to create more than $1,000 loss. I may only want to do 500 shares to give myself a little bit more room so that I don't lose more than what I anticipated losing on the trade. So there's a lot that goes into it, but hopefully these will give you some ideas to think about. All right, so let me pull up a summary for the things that we went over. And started off by talking about a watch list, showed you how you can set up a watch list. I ran scans against that watch list. We reviewed some of the charts, pulled up one particular stock. We evaluated the relative strength, calculated the reward to risk, determined position size. And now I want to just pull up the trading poll and just see how often everybody trades. I'll tell you, for me, I could trade quite a bit on a monthly basis. I'm probably in the more than 10 times a month. I'm not going to say every month, but most months I would trade more than 10 times a month. And that's about 37% of you. 0 to 5 times, 44%. That is the majority of those responding to the poll actually trade relatively few number of times during the month. But right on the heels, 38% is more than 10 times a month. So, and then 6 to 10 times a month, 19%. So more than half of you trade at least 6 times a month, so more than once a week. Anyhow, I thought that was kind of interesting, the poll. And Erin, I'm assuming you're probably in that 0 to 5.
That is correct.
Yeah.
0 to 5 times.
So you're in the 43%. I'm in the 38%.
Yep. It is, everybody has their own style. And, if I do feel like doing a few more trades than that per month based on, what my scans are giving me and that sort of thing, and the setups, I'll trade more than that, but typically it's 0 to 5 times per month. I hold my positions a lot longer.
Yeah, I hold mine about as long as I can hold my breath sometimes. Anyhow, we've got the 10 and 10 coming up, and I know we're running just a couple minutes late, but no biggie. We'll get back on schedule. Yeah, let's go ahead and go into that 10 and 10, and I'll let you take it away with your RRG look.
Yes, let's take a peek at what we have right now. So currently, and I think I added the last 2. Yes, I did. Okay, so we do have about 30 stocks that we're going to look at, and I'm going to put them in the RRG view. I don't pick these strictly on the way their RRG works. I try and mix it up between sectors. I will look at I'll just take it down here and hover and get a chart. And if the chart looks interesting to me, then I'll probably pick it as well. So there are a lot of things that go into it. But the second one is the most popular request in the chat room. So go ahead and like some symbols. Let's see, the currently most popular is Square currently, but there are a few others in the running that are very close. So go in there in the chat room if you're watching live from the StockCharts TV tab on the website, and go ahead and vote. But as you can see, there are a couple that are way out off of the center. So I think that's going to be interesting. I'm going to get this a little closer, take our tails down a little bit more. And there you go. There's a couple of very interesting ones with the headings as far as RRG. But first one is going to be Chart Industries, GTLS for you.
Okay. Annotated this one already, and you can see a triple top, actually really quadruple top coming across here. We broke out. I circled the volume because I always talk about confirming volume, and this is what I mean by confirming volume. You can see the volume just drifting down here about 200,000 shares a day. And then when we make this breakout, look at the volume expand up above 400,000 shares a day. That's what you want to see when you get a breakout. As we come back down, that test of this breakout area, I think, is a great entry point. I'm not a big fan of chasing. You chase after a few days to the upside, you get in at 66. You're not feeling very good 3 or 4 days later when you're at 62, just getting a normal test of price support. So I think that the 20-day test here presents pretty good reward to risk opportunity. You can see also the RSI had gotten up into the 70s. That's pulled back into the 50s at least. So making it much more palatable, I think, for entry. I like GTLS at this level.
All right. And the most popular currently in the chat room, it was a fight between Square and Voya. Square is the winner.
Okay, well, Square, and I saw on the RRG, I really liked it. It was starting, one of the things that Julius talks about a lot is when it's in that weakening quadrant and then turning back up, heading toward that strong quadrant. And that is what Square was doing on that RRG. I think the only thing left here is to get this breakout above the March high. I think it's coming. It's just a matter of time. There's the level you want to get through, $58. We got up to 57.84 earlier today, so really threatened a breakout earlier. Volume did pick up a little, definitely worth watching into the close today. And so far, it's been acting very bullish on pullbacks. And what I mean by that is when you get these pullbacks and you hold the rising 20-day moving average, you've got a very strong PPO that's rising off of this center line, which I think is very bullish. We've got accelerating momentum to the upside, pullbacks holding the rising 20-day. All we need is a breakout. My best entry here, I think, would be down close to 54 because that's been fairly good support. That's where your 20-day moving average resides. So I'd either buy there or on a breakout. I think at the current level, the reward to risk is not really what you want. So I like the stock. I just wouldn't buy it at this particular level.
Okay. Let's go ahead. And the next one is medical equipment industry, Tandem Diabetes Care, TNDM.
Okay, and I saw this one way over on the right side of that RRG chart.
Yes.
And usually what that means is you just got a stock that's been on fire. When you get that far to the right-hand side and you're in that upper quadrant, upper right quadrant, normally I don't even have to look at the chart. I know it's one that's just been absolutely on fire. And this is that type of a stock. I mean, earlier today, got down to 1162. This might have been one we looked at recently. I can't remember. It was, or maybe it was just a chart that looked very similar. But when you get these stocks that get way away from their 20-day moving average, you want to wait and try and get them near the 20. Throughout this move over the past 3 or 4 months, you can see that the stock's been trading above its 20-day moving average. I think that's a really good thing, very bullish. And that's the type of momentum that I want to trade. I think that's pretty obvious there that we have been uptrending. If you look down here at the volume, look at these huge volume bars on these moves to the upside. That's telling me there's accumulation taking place, that the stock's getting a lot of support. And so when it does pull back and when it does get close to a key moving average, like that 20-day moving average, we didn't quite get it on these other moves down, but we got close. Today, once again, we got close. That's when I think the reward to risk turns a lot more in your favor. Now, right now today, it's down 8%, but it's well off its earlier low. It's already $1.40 off of its earlier low. That's 12% off, 13%, something like that off of its earlier low. It's incredibly volatile. So many of you who maybe have low risk tolerance probably have no business even looking at this stock. For those that do look at stocks like this, obviously, you're looking for big returns, but you're also willing to take big risks. And that's what I would be looking at with a stock like TNDM. But again, the best reward to risk setups are going to be when you get these 20-day tests or get close to the 20-day, because then you can manage your risk a little bit better.
Indeed. All right. Let's see. After that one, I have WD, Walker Dunlap Mortgage Finance.
Okay. Trying to strengthen back up again. Did hold. Let's see here. It did hold support. It looks like we had a breakout right about here. We went sideways for a couple of weeks and then broke out. Look at the volume pickup as we made this breakout. Went back down and we've held that level. I'm gonna say 53 to 54 in this area is where you want to watch the downside. To the upside, 61 is your target. So using that as your target and then your stop area, the closer you get it down to 53, 54, the better that reward to risk is going to be, and the fewer shares you would have to buy, or the more shares you could buy if you wanted to really, based on the amount of dollars that you're willing to risk. Hopefully you understand that. I mean, if you $53 is your stop, and you're at 57, you're risking $4 a share. But if you waited and the stock goes down to 54, you'd only have to risk $1 a share. So you could buy 4 times as many shares and have the same risk as if you bought today. But anyway, WD, I think, is sideways consolidating off an uptrend. These are the levels I'd watch.
Okay, let's see the next one, number 5, TPR. And that is, let's see, where did that go? Oh, Tapestry. That's clothing.
Yeah, it's in a good area, but it's not performing well. And I believe that was a big miss for earnings. And look at that volume coming in. These are not the stocks that I tend to trade. When a stock comes out, misses its earnings estimates, and then trades down like this. I don't know why that does that sometimes. But anyway, let me pull up that arrow. When I get a volume bar like this, like unlike anything I've seen, it did have a hollow candle, so maybe it gives you a little bit of good feeling. But this is a stock that was at almost $54 and opened below 47. That's not a good move, and the selling has continued to the downside. I'm not a fan. I would be just watching this one from the sidelines. I think there's so many stocks in this space that look so much better. I'd avoid it.
Okay. Let's see. Let's do our only consumer staple request today, CVS.
Yeah, it's doing about what consumer staples are doing, which has just not been that exciting. I mean, we are seeing a little bit more relative strength with the 10-year Treasury yield falling and the market weak, especially today. But these are the areas that I would watch. I think we're just, been downtrending. We're in the middle of a trading range. I really see nothing. Maybe in the very short term, you could look at this as a flagpole and a flag here, but it's within a downtrend, from an intermediate term perspective. So I don't really like it. I think that, again, there are a lot of other stocks much better. We're sitting in the middle of a trading range, a pretty wide trading range. So if I was looking for entry, I'd want to get it closer to $60.
All right, let's see. We've talked about it a lot, and it was a very popular request. Voya Financial. The question is, do you still hold it? Would you sell it? Where are you at with that trade?
I got stopped out today. Voya. And it's not that I don't believe in the theme that we talked about, but I don't make excuses for the stocks. I wanted it to hold that 20-day moving average. It gapped down. It's been trading down. I got out actually earlier. I set a stop below the 50-day. It could reverse and I could get back in at some point, but I have no idea. I don't think that the life insurance stocks should be falling the way they are, especially with the interest rates having been so much higher. But now we see the falling 10-year Treasury yield. We are potentially breaking down below some key support levels here. If I was still holding it right now, I'd see if we close below 51. Below that level, you're talking about the next support being around 48.5. This to me was a false breakout, definitely got me in. I liked the whole theme with the rising rates and that life insurance would move higher. But with the 10-year Treasury yield falling, this is one of the areas in the financials that are getting hit pretty hard. So for me, I had to keep my stop in place. So I ended up getting stopped out here.
Indeed. All right, next one is RGR. And the person says they've been trying to short this stock and it just won't cooperate. What do you think?
RGR, yeah, I would not be, well, I'm just not a fan of shorting, but you've got a stock that's uptrending, holding the rising 20-day moving average. If I was shorting, it would be stocks like TPR, Tapestry. I showed you a couple minutes ago where it had the huge gap down with earnings. I'd wait for strength on a weak stock. I think shorting strength in a strong stock is not a good strategy. It's just my opinion. There may be many of you out there that can do it with some success, or maybe with a lot of success. I can't. And maybe it's just the psychological part of trying to short a stock that is performing so well. But you can see these tests of the 20-day moving average have been very strong as we've broken out to the upside. Now we are starting to lose a little bit of volume, so maybe we're getting closer to a short-term top. Volume, you can see, was very strong on the last breakout. PPO continues to show strengthening price momentum. So I don't like it as a short, but then again, I don't really like much of anything as a short.
That's true. All right, popular international business machines, IBM.
All right, IBM, well, you're getting down close to support. I'll give you that. It has not been performing well in technology space, which overall has still, up until today anyway, been doing pretty well. I think IBM's in a trading range. Here was a pretty big support level. Look at the volume coming in, lost that support level. And notice each time we've gotten back to 146, we failed. We established the low just below 140. I think it's in a trading range. If I had to do something with the stock right now, I'd be a buyer, just because the reward to risk is solid within this trading range.
Okay, and one more. Let's do an ETF. Let's go with PDBC. Power shares. Optimum yield diversified commodity strategy portfolio.
Wow, that's a mouthful. Just looking technically at it, I really would like to see a reversal here on the 20-day. I'd feel better about it. If I annotate, normally the way I trade is I like to see the strength. I like to see the momentum, and that's what the PPO is telling me here. It's broken out to a new high on this price action, so that's great. But normally what would happen is I would be a buyer on weakness down to this 20-day moving average. So right here, that move on Friday, if I was trading, looking at this, I probably would have gotten in on Friday's test of the 20-day, but I'd probably be back out if we didn't hold it on the close here. Next key area of support that I see was probably back here on this breakout, right at about 1820. So if it fails to hold the 20-day moving average, I think you're opening up maybe for a little bit more downside action.
All right. And that concludes the 10 in 10. You'll see all of the symbols right here. I will have those up for you after the program in the Market Watchers live chart list. It's very easy to get to. Go to the website, click on the blogs tab, and look for that Market Watchers live blog recap, and you will find the chart list right there. All right, so I'm going to talk briefly, very briefly, because I have a DecisionPoint report to give, what's been going on in the market while we have been on air. And as you can see, markets are certainly moving downward. We came up off of intraday lows, but it looks like we are headed back down. S&P, NASDAQ, all of those large caps, small caps, making a bit more of a rebound here, but they are also still down. Russell 2000 down 625. TSX trying to get back up to even, but also on the downside. Treasury yields are lower, currently reading 2.815%. UUP, big gap up and continuing to move and make intraday highs. Commodities are lower, making intraday lows. We can see USO, which has backed off quite a bit in a correction mode. It's still moving lower, currently reading at 1339. Gold is holding its own right now. Given that the dollar is up so high, we usually see a different picture for gold, but gold is up. GLD up to 123.46. VIX is hovering right around 17. And we can see TLT with the treasury yields moving lower. We got a big gap up on TLT, and it is still continuing higher, currently reading at 121.56. And that concludes our final market update. And let's talk a little bit about stock charts. ChartCon. And I'm going to make it this very brief as well because I want to get into my report. But just a reminder that on August 10th and 11th, we will be conducting ChartCon 2018. This conference is online. You do not have to travel to Seattle to come see all of us. And the theme is excellent this year, reducing risk in uncharted waters. And I think what Tom talked about today as far as position sizing and understanding the risk when you jump into a stock is very important. And you will get quite the agenda on all of these topics regarding risks, stops, entries, targets, and stops. All of these are excellent. The Chande trend meter, I'm very excited to see more from Tushar. That'll be excellent. Quite a few great speakers, excellent presentations. Highly recommend you go ahead and register for that. It is live streamed, so you will be a part of the conference live, but of course you will get to keep all of the recordings so that you can go back and use them and look at them, take more notes. If you're watching live, you may not want to do that. So go ahead, sign up, and let's go ahead and get into the DecisionPoint report for this week. And it is a short week. We are starting on May 29th. I will be giving you the DecisionPoint monthly report in a few days after all of our monthly charts are up to date. But let's go ahead and move right on in here. I'm going to get my screen a little bit bigger for everybody. All right, so what I want to do is I'm going to go through the major markets. We'll look at the daily charts. If I have time, I can, and if the interesting weekly charts are there. And then I'm going to look at our indicator sets in the short, intermediate, and very, very short term. And then I will be going over the big four, which is dollar, gold, oil, and bonds. So we'll look at what DecisionPoint signals are and how those are moving. Right now, here is the picture of the SPY. Not happy to see this area of support being broken at that April high. We're also seeing prices below the 50-day EMA. All of these are definitely concerning. And I decided that because I went very bullish last week, that must be the reason why we're getting these breakdowns. But I'm not looking at a bear market. I think we just may have to correct just a bit further. There's been a lot of various international news that could be shaking things up a bit. But we do have a PMO that is topping. We'll be watching very closely and see if it will get that PMO sell signal. I wanted to show you the S&P 500's weekly chart. And you can see I've been watching the PMO on the weekly chart, and we were getting it turning up. It looked like we might get some good momentum here in the intermediate term as far as the PMO is concerned, but we're now turning back down. Don't like that, but I do see rising bottoms. This rising bottoms trend line, we could find some support there. I think we better find some support there. We're going to have to go back down and revisit those lows that we saw earlier at the beginning of February and in March. Let's go ahead and we'll peek at the Dow. And currently, actually, what I'm going to show you very quickly are our scoreboards, and you can get these right here on your member dashboard. And there we go. So you can see right now, and all of the signal scoreboards for the top four, large caps that we cover. Here they are. All of these scoreboards look identical. We have short-term, mid-term, and long-term as far as the price trends go. We are on buy signals. And the PMO signals, we're on buy signals, but you just saw that weekly chart. having difficulty getting the PMO to turn back up and get that positive crossover. And as I said, you'll see the same thing for the Dow, the NASDAQ, and the S&P 100. Difference being, of course, the dates that these signals came in. And just a note, we do get the question, is for the intermediate term signals, we wait till the Friday or the last trading day of the month, and then we determine what the signal is. Same thing goes for long term at the very last day of the trading month. That's when we log the signal. So if the dates seem a little off to you, that would be why, because we want to wait until we get the final numbers to get those weekly and long-term signals out to you. But let's go back. And as you can see, the Dow also, we're getting these breakdowns. I'm very disappointed. Very disappointed in the stock market. No, we've had it's been very difficult. You can see the 5 is now getting ready to travel below that 20-day EMA. 20 is getting ready to come down here and test that 50-day EMA. If we get those negative crossovers, we're going to see some neutral signals coming in for the Dow. And as I said, all of the major indexes, their daily charts look very similar. I think, the good news is when you look at the NASDAQ, it's still holding that support area. And, that we would like to see the technology hold strong here. The small caps have been leading the way. And let's look at the small caps charts. I'm going to use IJR, the S&P 600. And, we've had a lot of strength and leadership, honestly, from the S&P 600 and the Russell. They are pulling back, but, they were sitting at all-time highs last week. And I suspect we're going to go back up and start testing all-time highs once again for the small caps. You can see we are losing some of that positive momentum in the fact that we are consolidating right now for the S&P 600. I'm looking at IJR. IWM, we're testing some very important support right now at these tops from January and March. And we want to watch that very closely. This is a bit concerning. We do have a PMO that is topping, but we've got a very strong scooter still, and the OBV is still trending higher. You can see that especially in the thumbnail. So I think the Russell 2000 and small caps still look very strong. They're having a bit of a pullback right now, which makes sense when you see what's going on in the S&P and OEX, all of those large cap indexes. I think, we lost this area of support. Like I said, doesn't make me happy, but we do have declining tops line, trend line coming in here as possible support area. The PMO is topping. We haven't gotten the sell signal yet. Everything was looking very good. I have to say, like a week ago, 2 weeks ago, I really was seeing the signs of recovery. And I was expecting to see us go and test the highs back here from March. And instead, we're starting to pull back again. There's still some weakness out there. Sentiment is suggesting this is going to happen. I did go over sentiment last Friday if you want to look at that report. All right, let's look at the actual indicator suites that I follow. And somebody did ask about the VIX today, so I'll be talking about it. What I look for, these are climactic indicators. So I am looking for climactic readings. That's when I get information that's important. Right now, as you can see, we're not getting any climactic readings as far as breadth is concerned, but we are seeing the VIX now penetrating that bottom Bollinger Band. And a reminder, I'm looking at these in the very, very short term. And to me, the VIX is it's an excellent, very ultra short-term indicator. It gives us some ideas of what to expect on the next day or two of trading because of the climactic moves that you'll see. So that's why I invert my VIX on the climactic indicators chart. And this is important. With the high readings we're getting right now above 17, we're penetrating that bottom Bollinger Band. And typically when you get penetrations of the Bollinger Bands to the downside, that tells you to expect a rebound tells us to expect some rally at this point. I'm not getting breadth readings that are really helping me out here. So I'm just going to go strictly by what's happening with the VIX on that Bollinger Band. So I will be looking for a rebound tomorrow or the next day based on what's going on with the VIX and the fact we spiked lower here. Short-term indicators. These had started to turn up and look a little bit better, and now they are turning back down. At this point, though, we have mixed readings, and honestly, I like it when I see the Swenlin trading oscillator for volume rising, even if we're seeing some decline in the breadth indicator. And that's the main reason is, you know, it's that old adage, price follows volume, price follows volume. So if we have strong volume or the volume indicator is moving up, that's a good sign for the market. We're not getting the breadth to go along with it, but I think that it's positive seeing that STOV starting to rise. But as Carl said in his weekly wrap on Friday, you know, in general, these indicators are neutral. And I agree with him. We're in neutral territory, meaning we could resolve this to the upside or the downside. So they are a little bit vulnerable right now. But short-term indicators suggest to me a neutral position. Intermediate term indicators, I've been very happy with these indicators. They have been rising. We've seen a little twitch previously. This is probably the most we've seen these indicators moving in the negative direction. And as Carl said, this isn't particularly overbought territory here, but we certainly have seen tops right around here. And especially the last two tops, they were both below what we're currently topping at right now. I'm not going to get too worried about these indicators until I start seeing those downside crossovers. That is very important. But right now, I think we are getting a little bit of warning that there is some weakness out there. Not a surprise again when we see a drop like we're seeing today. It'll be interesting how today's drop will affect these indicators. They don't go final until the end of the trading day. Let's go through the big four very quickly. Dollar, just on a straight up move. We finally got the long-term trend model buy signal. So we finally moved UUP. The dollar is now into a bull market configuration. And you want to see that because then you can start expecting bullish outcomes to patterns, all of those things. It's great. You really want to see that golden cross the 50 above that 200-day EMA. The concern I have here for UUP, though, very, very overbought PMO. And, you know, I usually will take this to a longer look. I'm getting low on time. I am watching to see what the actual you know, regular trading zone is or the oscillation zone for the PMO. And on UUP, yes, we've seen really high readings back here at 1.75, but typically you're going to see an oscillation between 125 and negative 125 right in that area. So we are very overbought. We've seen it get more overbought, so that's what's keeping me from getting too concerned. I'm still very bullish on the dollar. I mean, how can you not be? The excellent breakouts, continued moves higher. Weekly chart, and there you go, still on that uptrend. This declining wedge executing as expected. Look at the 14 and 17 and 43 week EMAs. They're getting ready to have a positive crossover, and the PMO has now hit positive territory. So the dollar still looks good. It's just getting stretched out and overbought as far as momentum. Now, gold, what I'm going to point out mostly that's important is we're finally starting to let go a little bit of that inverse correlation. Typically, you know, if dollar goes up, gold is going to go down. And we're still seeing that as far as the correlation is concerned, but we're starting to uncouple right now from the dollar. And I think we should pay attention to that, which is why I follow that correlation now very closely. But we've hit overhead resistance here at that 200-day EMA. And honestly, with the dollar still looking very strong, I'm expecting gold to travel lower. USO having a major pullback right now, a very quick pullback off of this strong rally that we've seen, but we're sitting right now on very important support at about 1325 at these tops in January and March, but also rising bottoms trend line support is right there as well. So I'm looking for USO and oil to hold this area of support and turn back around. This is a difficult setup when you look at the PMO, obviously very bad with that decline on the sell signal, and you can see volume trends not looking too good. But we're near that very important area of support, and it's just a good place now to turn this back up. We were getting very overbought on oil, and so I think it needed this pullback, but I don't think that this is going to be a crash in oil, especially since we're getting ready to go into the summer months. TLT, wow, what a turnaround. You know, it hit that 116 mark and we've been moving higher pretty much ever since. Still in a bear market setup with the 50 below the 200, but we've got the PMO buy signal. And look at this scooter has just gone crazy right now. But we're hitting some very important overhead resistance now. And, you know, we had treasury yields just totally, you know, the bottom fell out. And so that's why, of course, we're seeing this resurgence in bonds, but we're at pretty important overhead resistance. I just don't think it's going to continue on. I think we're going to see the yields starting to move back up soon. So bonds, in my opinion, I would be cautious. We've had the big run up, as you can see, and now we're hitting very important overhead resistance. Okay, let's look at those summary slides very quickly, and then we can wrap this up for the show. Just wanted to let you know again, and as far as price trend, we're on buy signals across the board. PMO signals, we're doing great, except in the intermediate term, and that's a problem. Long term, still looking good. As far as the condition, when you look at the indicators and where they're situated right now, you know that the ultra short-term indicators right now are showing. Can we flip the chart, please? We can see that short-term indicators are in that neutral place as well as climactic, but that oversold VIX looks pretty good. Finally, as far as dollar, gold, oil, and bonds, I've got the summary right there, and I will put that in the Market Watchers Live recap. And with that, I'm going to conclude. I'm going to conclude the DecisionPoint report. And wow, this week it's not over. We still have quite a few great guests here. Mark Chaikin will be here. We have the seasonality report by Tom on Thursday, and I will be doing the monthly version of the DecisionPoint report on Friday.
Yes, and it's always exciting to have Mark Chaikin on. So looking very forward to that. And then with the seasonality report, I'll let you know how the different major indices do, various industry groups, and some stocks as we head into the summer months, starting with June. I want to thank everybody for being with us today. Please remember to complete the survey as you exit. We do love to get your feedback to hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody, and we hope to see you back here tomorrow on Wednesday. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.